Ladies and gentlemen, it's time we talk about this. It's a long time coming, but today we are talking about how I made over $50,000, went from roughly zero to over 50K in the stock market, lost a very large chunk of that, came down, portfolio was down to roughly, I want to say like $11,000 at one point, and then now how we're back up to well over 30K or something along those lines as we speak right now. And all of this is tracked on the Trading Stocks to $100,000 series that we are actually approaching, if not very, very close to 100 episodes in. I've been making videos in that playlist for over 100 weeks. Every single week, we post an update there for you guys. Again, the whole point of that is 100% transparency. You guys see the P&Ls every single week, and now there's 3 public accounts there. And to be honest, that's not something that I plan to stop for a long time, honestly, if at all. So going back to the beginning, now realistically, I got started in the stock market roughly in 2016. Do the math. I'm 24 right now. I don't know. Birthday's in July, so do the math. But realistically, I started a lot more seriously in the fall, or actually just late summer into early fall of 2019. The date that we opened up this Webull account that we primarily look at all the time here on those Trading Stocks to $100,000 challenge videos. If you want to call it a challenge, it's more so a documentation of what I'm doing. But from that date to almost now 3 years later, we have essentially gone from $0. I deposited $250 in the account shortly after the day we opened it. And then I took that up to over 52 grand in a very, very short period of time. If you do the math on that, there were deposits along the way. Then we went from that 52 grand, fell back to, I think the lowest the portfolio hits that I saw was around 11 grand. And then from 11 grand, we're back up to around 20K right now. And on top of that, we've also created a Robinhood portfolio that has roughly 11, almost $12,000 in as well. So roughly in the lower 30s. Now, along the way, again, for full transparency, I was taking money out. Outside of that first year or two, the past, let's say 12 plus months, 12 to 18 months, there has not been any money going in to the Webull account at all. It has only been money coming out. Some of that money actually went for personal use, and then the rest, or the majority, went over to fund that Robinhood covered call portfolio just so that we can diversify a bit, and this way we don't have to necessarily have the massive swings. That's the goal, so that the net worth or the net value of the portfolios isn't going like this and this and this, and that's something to learn. But then again, we've been through a period of the markets that have been anything, but normal, right? So it's been a ride, to say the least. Now, as I speak right now, Webull's giving me or spitting out a number of roughly 400 and something percent returns lifetime on the account, which honestly sounds like fairly accurate from how I started to where we are now. So over the course of like 3 years, that's pretty awesome. I don't expect that to stay at that pace, obviously, by any means, and we'll see how things play out. Honestly, I always think to myself that I can do better than that in the future, and you will live and learn, and there'll be periods of time where you have a really good handle on things and times where you don't. But let's dive into the points that I want to make here in this video. And this is not something, there's nothing at the end. There's nothing that we're getting to at the end to then, okay, buy this. Like, there's none of that bullshit. Like, I'm not doing that stuff. Hopefully you guys appreciate that. This is just literally just me explaining to you the 3 biggest takeaways that I have. There's obviously a lot more. We talk about stuff on lives. You guys ask questions. I answer the questions all the time. And so I don't want to stop that, but let's go. First, this is a huge one. It's that you don't always need to be fully invested. Okay. Now, there will be the second point kind of builds off of this, and I'll explain how that works in just a second. But the biggest thing that you're almost told, or at least the way I almost grew up throughout high school and college when I really kind of got into things, it was always like grind, grind, grind. It was always like put your money to work, get your money working, make money, get that money working for you to make that passive income everyone wants and all that good stuff. Cool, awesome, great. The problem in the stock market is that there are times when you can be pedal to the metal, when you can be fully risk on and have all your money in. And there are times where you quite honestly should not be. And when you get to points where you really have minimal feel for where things are headed, you're not really understanding things, that's definitely a sign to pull some money out and not be fully invested. It's going to protect your downside, and it's going to preserve that capital for a time where now you see something that you've maybe seen before and can strike when the iron's hot and can really dial in, nail those higher conviction trade setups investments, whatever it is, which are going to ultimately compound much, much nicer down the road. Part of this had to do with FOMO. That's an obvious, like, oh, FOMO is like the, oh, okay, I'm not going to put FOMO as like the number one thing. It's the same crap you probably hear from everybody else, and it's not really useful to you, okay? But partially had to do with FOMO because you always are being told to put your money to work, put your money to work, put your money to work. But when you realize if you're looking to trade more actively in the stock market, and that's the perspective we're coming from here. We're not coming from a long-term investing perspective, although there are different strategies, which we'll talk about in a second. When it comes from more of an active perspective, you could go 6 months to do nothing to all of a sudden have a perfect setup that you nail on month 6 to month 7 that makes your entire year. And that's the reality of the stock market, and that's the potential that there is when it comes to being more active and actively managing and not necessarily just being a buy and hold investor. If you do want to be 100% in and you always have that feel, then hedge. Always make sure you hedge during times of uncertainty when you don't have a good feel for things or when you're just not sure where the next move is going to be. That's the time to hedge. And then sure, you can be 100% with the portfolio in. Just make sure the hedge is there to protect your downside on those losses. Now, number 2 is that investing is not swing trading, and swing trading is not day trading, and day trading is definitely not investing. Completely different categories, completely different styles, completely different. No one talks about this. Seriously, and it sounds simple. It's like, okay, whatever. No, because the problem that most people have when you follow your favorite person over here on Twitter, on this, on that, you're following them, but they might be strictly a day trader, or they might be a long-term investor. And so they don't have the same emotions, they don't have the same things going through their head that you're going to have if you're trying to swing trade all the time because you're under the PDT rule. Now, there's ways around that. We got videos on that on the channel. Please learn and do the research to figure out how you can get around the PDT rule. It's not, this day and age, it should not be a limiting factor in your trading. It really should not be. Okay, the PDT rule is not why you can't make money. Definitely a myth right there. I have gone through this actually more recently, the past like year or so. When you have too many strategies going on at the same time, let's say in one portfolio, number 1, you can't mentally focus on any of them in depth. And number 2, you're going to be all over the place. Like, just think about this, right? If you're trying to hold stocks in your portfolio that are long-term investments, right? Then you also have stocks that are, let's say, short-term day trades. And then you also have stocks in the middle that are swing trades. And then you got penny stocks. Then you're doing covered calls over here. And then you're selling puts over here. First off, the buying power is going to be all thrown off, all out of whack. And if you're doing it, properly, I guess it could work, but you're going to have your head in 30 directions. First thing is I would recommend separating those accounts. So have your long-term account that you just buy and you never sell and you just dollar cost averaging, have that set aside as its own thing, okay? Have your day trade account as its own thing and make that go cash every night if that's what it's for. And then have your swing trade account for what it's for. Like, literally only do what that account is meant, or what the original idea of that account or style or strategy was meant for. Now, is it the best to try to do all of them at the same time? Probably not. However, you're not going to figure out what you're good at without trying shit. So you have to kind of try a bunch of different things. Hence why we have a bunch of portfolios, and hence why we're doing the small account challenge, just strictly day trading options or large caps on the channel recently, because we're trying shit right now to see what the hell we're good at. And if we're not good at it, then we stop doing it, but we're doing it on a small account for that testing purposes. And so we're not going to be taking out of a larger account, which is a mistake that I made in the past and definitely brought us down and took a pretty decent chunk out of returns we could have potentially seen had we not done that over the past year or so. Stupid stuff, but hey, it is what it is. Hindsight's 2020. All we can do now is learn from the mistakes and look forward. That's the deal. Here's number 3. The last piece is following alerts and callouts is not a consistently profitable trading strategy. Now, again, why do you see and why aren't there all these crazy testimonials and all these crazy things of people who've now completely changed their life and are doing it on their own? You don't see very many of that. When you look at this person's course or this person's, Discord group, you see people who have great, testimonials, results from individual trades that maybe this guy called out or this person called out in that chat, right? But those individual trades will be the ones that sell you on it. But then once you get in, what do you realize? Well, you win a couple individual trades, then you try some stuff on your own, and now you get screwed, get blown up, and next thing you know, your account's back at zero. You exit the service. You're not paying for it anymore. You can't afford it anymore, and you're back to square one. Like, that's like the legitimate process. I've been through a million of them to know. Like, that's like how this game goes, right, in the long run. So following alerts and callouts is great because you can get a really good understanding for what this person looks for, what works for them, seeing that thought process, seeing that trading plan in action. But then ultimately, you have to go out and do it yourself and figure out what works for you by trying, testing, back testing, and then gathering that data for yourself so that you can act upon that in the future. The key and the focus should be on learning the skills, not following the alerts, okay? Learning the skills, crafting your own plays, building your own plans, and then from there, taking the data that you're getting and generating and applying it. And that's a big point to what we're doing on the small account challenge, because I'm someone who primarily, going back from the beginning, I was never really a day trader. Never, I mean, here and there, yeah, but I was never a day trader, right? But what I've been doing lately is saying, okay, I know that if I could be a day trader, I could trade in any environment. And so I want to trade large caps, which will trade in any environment. And I want to make sure I can hone those skills or try to hone those skills and do something that I haven't done before, and then get the data, gather that data, and then learn from that data to improve and see if I can do it. Because at the end of the day, there's always something to trade when it comes to large caps. And no matter if markets are up, down, bear market, melts up, what doesn't matter. There's always opportunity. And so you want to make sure, at least I want to make sure, that I have something to fall back on at all times, hence why I'm doing that. So that's what I would recommend, and that's what I think the value of back testing and doing it yourself. There is just tremendous value there, but you got to be hard on yourself. You got to understand, hey, you can't, again, the definition of insanity, you're doing the same thing over and over and expecting a different result. If you keep doing the same thing and you're losing money, like, it's obviously not working. So you got to slap yourself in the face and you got to pick yourself up and you got to change something. And that's the name of the game at the end of the day. So hopefully this video was helpful. Again, there's nothing, again, the great thing here is that there's nothing that I'm selling you at the end. Like, this is no BS. Like, hopefully just all I appreciate is a like on the video and share it with someone if you got some value out of it. That's it. But I don't do this for the views, the likes, and that stuff, because if I did, guys, I would have stopped a long time ago. Go back on the channel and look. Reality, go look it up. Go look up how much money people make from YouTube revenue and views. You can do the math. It's all public. Figure it out. It's not much. So this channel is not something that's making me tons of money and that I have to come on here every single day and say, hey guys, I made all this money today. Follow me, buy this, buy that, because that, is how I afford my lifestyle. That's not, okay? At the end of the day, the real scale, the way that I want to make the majority of my money down the road is from the markets. That's where I see the most value. That's where I see the most scale. And that's where I feel I'll get the most happiness out of, knowing that I've done it myself in the long run. But it's a long-term game. The market's open today, tomorrow, the next day, the next day, the next day, the week after that, the week after that. So don't rush. There's time, and you could do a ton of damage, good and bad, in a very short period of time. Thanks so much for watching, guys, and I'll see you in the next one. Peace.